Okay, anatomy of a pattern trade here on Canada. Canadian dollar on a 240-minute time frame. We're going to identify previous double top right here. Beautiful symmetry. DST clients note price and time symmetry. Bars down, bars back up. What does the market do? Here's an impulse drive to a new structure low. That candle right there, 4 o'clock, could there have been news event? Look at the volatility or high to low range on that versus other candles on either side. Then the market rallies back into this swing high. Right here could be a turning point. There's a swing low, but the lower high holds. Then the market drives down to a new structure low. Outside return, lower high. Followed by a retest of that low, then a lower high. Market drives to a new structure low, lower high, new structure low. High to high trend line. Right here is the impulse move where the market breaks structure. X to A. Throw your expansion code on here, and right there you'll see this guy drive into a bull continuation pattern. Okay, so once we see that impulse and drive to the new structure high, this becomes the retracement. Now let's start the replay from right here. I want to take my swing high down to this impulse low and back up. We've got a 127 extension and a 1618 extension right here. Looking for Ratian confluence. Swing low at X to the highs at A. Okay, so the 127 and the 1618, you'll see this on either side. So we do two things. We pull in 707 and 50. Now you see I've got a 1618 extension at the 707 retrace. This is the top part of a bid zone. Look left, structure resistance, anticipated support. If my trading plan calls for the top part of the bid zone, then buy half right here. Two minis in the foreign exchange as an example. Two of them down here. Protective stops below the swing lows at X. What's the initial target? What's the extended? All of this analysis done prior to the entry. Okay, so if the 127 holds, then we have an expectation that the Canadian dollar is going to 109s. Okay, long on partials. And now we move into a sideways trade. See the market, since we put in the symmetrical double top, we made a lower low, lower high. New structure low, lower high holds. We did not take out that previous swing. Now we retest, lower high holds, and now here a new structure low. Multiple contract traders, here's your second part, the bottom part of the bid zone. Long 2 from here, long 2 minis from here. Long 1 full from here, 1 full from here. What does your position sizing model call for in your trading plan? Now we've got a new structure low, so we have to adjust our expectations as far as a profit target. Anything that we put on right here has more risk and less reward than anything we put on right here. We're still in a bear continuation pattern since the double top. Okay, are you starting to question the pattern? There's your 618 target attained. Ring the register, scalper hit. You got a higher high and a higher close now on the 4-hour chart. This swing high, this swing high, this swing high have all been taken out. So higher high, higher close. Look left. Where's my swing low? Stops come in to below the swing low. The first 2 contracts that you put out, the ones or the second 2 down here at 0460s, have now been taken off right here. Profit in the bank and reduce the exposure on the balance of the trade. Continue the replay. Now market comes up, new structure high. Look at the time it took. Our impulse move right here occurred on the 9th. Market pulls back, lows on the 13th. Got to remain patient. Then we have a new structure high and a higher close. Look left. What's the swing low? Opportunity 2, trail stops. Now we're testing double top highs right here. If you want to get more aggressive on the trail stops, take the high right here, look left, and from that swing low, same thing every time. Market moves to new structure highs. Okay, when we talked about this one real time, we talked about taking that swing high down to this low and now trailing that stop just below the 382 retracement. Why use the 382 retracement here and the 786 back here? Because now we are approaching our one-to-one measured move and thus the profit target. Let's pull in the 382. Okay, so because of the strength of that move, we're now looking at a 382 retracement versus the extended target. See the symmetry? 1-to-1 measured move. Right there, secondary target attained. Now, those would have been either the bid side right here at the 105.50s, so let's call that 108 for 250 pips. Back here, the 104.50s for the Canadian right here for about 100. Now, from the point of the initial entry, 8-2, August 2nd of 07, to the target, 13 calendar days, about 10 trading sessions. So let's just give it 350 pips as an example, or $3,500 per 1 unit on a 10 lot, or I'm sorry, a 2 lot, $10,000 account, 35% return. Had to be patient, had to trust the model through this sideways channel. From the point of entry right here, you didn't see any positive trading action for 7 days, 5 trading sessions. Did you believe enough to put the second part on right here, leave your stops down here? If you've seen enough occurrences on this pattern, absolutely. If not, you started to question things right there. You responded to emotion, you responded to fear. Right here, you felt so good about finally getting some relief on that trade, you may have taken everything off at market. God, I got to take those profits. This has been brutal going through this. Absolutely. When you emotionalize it, it will be brutal. It can be if you choose to allow that. But if you say, hey, did I follow my signal? Answer is yes. Did I follow my signal, my trading plan? Answer is yes. Then right here, you're patting yourself on the back, up $3,500, 35% on a 2 lot, and you're now waiting for the next qualified trading signal.